Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Good, but not good enough. Asian stocks fall after Nvidia fails to meet sky-high expectations. The chipmaker warning of tighter margins as it rolls out the highly anticipated Blackwell chip. Confusion on tariffs. President Trump gives conflicting answers on levies planned for Canada, Mexico and the EU. But the UK Chancellor tells us Britain can boost trade with the United States. Plus, more world leaders make their way to the White House, with the UK Prime Minister arriving today and Ukraine's president on Friday. We preview those meetings. So, yes, we have more Trump tariff confusion for the markets to work through, with a particular ire aimed at Europe. And then, of course, the earnings story from Nvidia, so crucial as a catalyst for these markets. Let's remind our viewers, they did, in fact, beat the earnings expectations for the most recent quarter in the fourth quarter, and sales expectations for the current quarter also coming in a little higher. But it's at the top end of the range around the estimates, in which there may be some disappointment. So we work through that story for you as well and bring you the details in the next couple of minutes. European futures pointing lower by 0.5%. That may be more of a reaction to the Trump tariff threats than to Nvidia, but we'll work through that in terms of the potential impact on European tech as well. FTSE 100 futures currently pointing lower by 0.2%. We've been hearing from the UK Chancellor on her aspirations of greater trade ties between the UK and the US. How realistic is that? US futures pointing to gains of 0.3%. Nasdaq 100 futures looking up by 55 points. Let's flip the board and have a look cross-asset. You did see money moving once again into treasuries yesterday. Yields were lower. Today, a little bit of stabilisation back in the treasury markets. Yields up 2 basis points. 427, still below 430 on the US benchmark 10-year. Euro dollar at 104, softer on the single currency by 0.2%. And Brent crude up 0.3 in the session at 72.76. Gold down 0.8, but digging a bit of a knock for the yellow metal, back below 2,900 per troy ounce. Let's cross over to Singapore right now. Avril Hong standing by for the Asian market deep dive. Avril.
Yeah, Tom, we're seeing Asia stocks declining after Hong Kong. Note how the Hang Seng actually rallied 1+% at one point, and it retreated, pretty much joining the declines across the region. Some of this is layered in with the tariff confusion. We're going to be watching out for China's 2 sessions next week. Something that, this could help the market momentum to broaden out beyond tech. This is, of course, China's meeting of top leaders. The Nikkei is a bit of a bright spot today. Some of this is M&A news related, but what the declines on the Chinese tech stocks tell you today as well, because the drag is coming from Xiaomi, Baba, Tencent, is that the US-China tech stock decoupling may be today that narrative taking a bit of a hit. Now, in terms of the chip names, they are down. These are the Nvidia suppliers in Asia, Samsung, SK Hynix, TSMC. Clearly, the spark that Nvidia once used to provide them, that's faded, and its earnings scorecard has not been enough to offset the concerns given the geopolitics and the shifting sands in the AI trade. If you're looking at the Bloomberg Asia Pacific Semiconductor Index, it's been down for all of this week, Tom.
Yeah, SK Hynix, of course, the maker of the HBM high bandwidth memory chips that go alongside those GPUs from Nvidia. So worth flagging that. Avril Hong in Singapore with the reaction there in Asia to what were a set of mixed results, essentially, from Nvidia. We'll do more of a deep dive right now on that story, because shares in Nvidia currently down 1.5% after hours. That's after the AI darling, of course, delivered good but not great quarterly numbers, drawing a muted response from investors accustomed to those blowout results from the company. The company's mixed outlook comes amid concerns about slowing spending on AI technology. Despite the challenges, though, Nvidia's CEO, Jensen Huang, remains optimistic.
Blackwell is going to be incredible across the board. And when you have a data center that allows you to configure and use your data center based on, are you doing more pre-training now, post-training now, or scaling out your inference, our architecture is fungible and easy to use in all of those different ways.
OK, Jensen Huang speaking there, of course, on the back of those results. For more, let's bring in Matt Bloxham from Bloomberg Intelligence, who's been working through the numbers. Matt, talk to us about the market reaction. Is this just another example of expectations being set too high for Nvidia? They beat on the quarterly earnings.
Yeah, they beat, but not by much. And I guess most people are looking at the kind of the revenue and the gross margin. Revenue is a couple of percent ahead, so not much when we're used to really big beats from Nvidia, and gross margin was in line. So I think, I think expectations were definitely a bit more muted going into this set of numbers because of the DeepSeek hype we've been having. But I think still, looking at some of our kind of client chats yesterday, we're still seeing people looking for where's the surprise going to come from. And I think people were looking for maybe a bit of good news on gross margin, and that didn't come through either in the quarter or what they said about gross margin for the rest of the year, talking about low 70s% gross margin, picking up to the mid 70s towards the end of the year, and that may be just about in line with consensus, perhaps a few people nudging down their estimates for profitability this year, and that's because of this transition from the Hopper chip to the Blackwell chip, which is costing them as they kind of get the production scaled.
Yeah, so there's $11 billion when it comes to the Blackwell. They say that they describe this as the fastest ramp up in their industry. Does this suggest? I mean, there's the spend. There's the $325 billion that's coming through from the hyperscalers. There's the fact that they're still seeing very strong demand, Nvidia, for their Blackwell chip, and yet it's hard to point to one enterprise or one sector that's really seeing economic impacts on the bottom line as a result of AI. So talk to us about where the AI bubble narrative sits.
Yeah, that's right. I mean, that's the big question. I mean, if you look at Nvidia's valuation multiple, it's on about 29 times earnings, so not much above the kind of the US average. But that's kind of essentially saying that the size of Nvidia today is kind of more or less what's going to continue, and it's going to grow a bit. And I think there's still this big unanswered question that a huge investment going in this year into AI infrastructure, but where is that return on investment? Is this going to create incremental revenue for people like Google, Facebook? Is it going to boost productivity for enterprises to encourage them to spend more in future years? And that's where the jury is very much out. So, I think lots of questions, and it's not until we get towards the end of this year and into next that you're going to really start to see whether we can sustain this kind of revenue and investment for Nvidia, or whether perhaps this is the peak and it's going to come down to something kind of a bit more normalised.
Okay, so maybe we finally get an answer to that question towards the end of this year. And as we say, pre-market, the stock is down a little over 1%. With the breakdown of the results, Matt Bloxham from Bloomberg Intelligence, thank you very much on that crucial Nvidia story. To the macroeconomics now then, and the latest lines coming through from President Trump giving contradictory answers about at a cabinet meeting about his plans to enact tariffs on Canada, Mexico and the EU. The president says he will impose 25% tariffs on the European Union, quote, very soon, and took new aim at the Bloc. Here's what he said.
We have made a decision. We'll be announcing it very soon, and it'll be 25%. Generally speaking, and that'll be on cars and all other things. And European Union is a different case than Canada, different kind of case. They've really taken advantage of us in a different way. They don't accept our cars. They don't accept essentially our farm products. They use all sorts of reasons why not. And we accept everything of them. And we have about a $300 billion deficit with the European Union. Now, I love the countries of Europe. I guess I'm from there at some point a long time ago, right? But indirectly, pretty directly too, I guess. But I love the countries of Europe. I love all countries, frankly, all different. But the European Union's it was formed in order to screw the United States. I mean, look, let's be honest. The European Union was formed in order to screw the United States. That's the purpose of it.
All right, there you go. Trump's views on the European Union being crystallised, it seems. For more, let's bring in Bloomberg's opening trade anchor, Kriti Gupta, who has, of course, been weighing up these comments and what it should mean for investors and how we think about the risk of tariffs. There are these mixed messages. There are all sorts of tariff plans, it seems, being mooted, being weighed up by this Trump administration, and still a lack of clarity as to when they land, the size, the scale, which sectors. How do we think about all of this?
Well, I think the one thing we might be able to narrow down is which sectors. And he kind of hinted at that there. Cars comes up a lot in some of the rhetoric when it comes to the EU. And of course, this is something that we know here in Europe has already been struggling from the Chinese overcapacity impact as well. But remember, the likes of Volkswagen, Mercedes, Porsche even, they are competing with the Fords and the GMs. And that's really where a lot of his base has converted post-election. So there is a actual incentive here from a domestic political point of view to really target the auto sector, despite the fact that a lot of Americans don't actually buy European cars. But that is still very much a topic. We know that steel tariffs are another one in terms of the actual inputs into the auto sector, but also one that has been frozen on ice for the last kind of 2 years or so. So the idea that some of the steel and aluminum tariffs could get renegotiated, and that deal is crucial as well, because another domestic piece of the story in the United States is that the steel industry and the aluminum industry is struggling. So if you put tariffs on that, in theory at least, it could potentially help kind of create more business in that kind of sector. He mentioned farm products in that thought as well. This is really important as well, because the United States' number one export are farm products, or agricultural products, but they haven't been able to access the European market or the UK market because of food standards and the way some of those products are actually harvested. So those are some of the references that he's making. Note that he hasn't talked about luxury. He hasn't talked about the likes of pharmaceuticals like Novo Nordisk, for example, that gets a good chunk of their revenue. So I think those are the 5 sectors to narrow it down from about 1 million that may be in focus.
You've just got to deal with your chlorinated chicken, Critty, and then we'll be fine. Look, I like the fact that you zero in and you make a point of clarity around autos and steel, because it comes up time and time again. So we have the clarity there, and I appreciate you zeroing in on that. The comments around the EU, this organisation structured, to paraphrase the president, to quote him, structured to screw the United States of America. He is really taking his ire out. Less so, it seems, on China, more on the EU. Have we had a response?
We have had a response. It's coming, of course, from the EU spokesperson. Look, they are treading with an abundance of caution for this reason. I think that's really the lesson you've had to learn from the likes of Claudia Sheinbaum over at Mexico, or even Justin Trudeau at Canada. 2 very different approaches met with 2 very, very different results. The European Commission spokesperson saying that the EU will, quote, react firmly and immediately against unjustified barriers to free and fair trade. But remember, he says unjustified barriers. Those are key words there, because we know in previous rhetoric from Donald Trump, he's also talked about non-tariff barriers like levies, like VAT, and of course like regulation as well. So that's another front of where this kind of competition and this debate could go.
OK, Kriti Gupta, opening trade anchor, cutting through the smoke and mirrors when it comes to the tariff story for us. Thank you. For more reaction in terms of the market reaction, and potentially how significant the transatlantic relationship could be breaking down, how markets should be thinking about that, let's bring in Bloomberg's Valerie Teitel, who has the details. Valerie, talk to us about the market reaction to this.
Very interesting to see that actually equities were the ones that post the most declines rather than FX in this new round of tariff threats from Donald Trump, his strongest language yet when it comes to the European Union. In the 30 minutes after those comments, we saw the Eurostoxx 50 futures drop 1%, nearly in a straight line on that comment, and they continued to trade softly in the Asia session overnight. Also interesting to note that there was softness in FX. The Eurodollar did post declines, but it was not as pronounced as the equity market reaction. We can just flip on and see how the Eurodollar has been faring. Down 0.5%. Those are some pretty decent declines for the euro currency, but we failed to sustain that break of 105 for yet another session, Tom. 105 has been a key level for the euro. It's really failed to sustain above that level for some time. Bloomberg Economics also put out some very interesting analysis about what blanket tariffs could mean for the European Union. And they're noting the GDP impact could be as much as 1.5%, with Germany being the one most negatively affected from a blanket 25% tariff. But Tom, most shockingly, they said that they see a 70% decline in exports to the U.S. in the medium term, with especially those industries affected being autos, industrial machinery, pharmaceutical, and medical equipment.
Wow. Look at that, 70% decline in exports, potentially, as a result of a blanket 25% tariff. Bloomberg's Valerie Teitel, thank you very much indeed with the market reaction and some of the detail around the potential economic impact. Coming up, we're going to switch focus to the financial sector. Insurers are going to speak to AXA's CEO, Thomas Buberl. That's after the French insurance company announced plans for a share buyback. The stock is up about 24% over the last 12 months. That exclusive conversation is next. This is Bloomberg. Welcome back. Happy Thursday. Back to the earnings story with a focus on the insurers. The French insurer AXA beating on its earnings story. Coming through with underlying earnings which rose 6% to €8 billion last year. €8 billion last year, just ahead of the estimates. Net income rising by 10%, and the company as well announcing plans to repurchase, in terms of buybacks, €1.2 billion of stock this year. It's also raising its dividend by 9%. Very pleased to say I can bring in right now the CEO of the business, the CEO of AXA, Thomas Buberl. Thomas, thanks for standing by. And let's get your reaction then, top line, to these earnings. I mean, you did particularly well in property and life insurance. What was driving the upside there?
Good morning, Tom. Yes, these earnings are very pleasing. These are record earnings for AXA. We have never seen such a high revenue and never seen such a high profit. It is really a proof that our business model that we have taken is the right one, because when you look underneath, all sectors, all geographies have been performing well. And this is the fruit of the work of reposition AXA over the last 10 years onto the sectors that grow the most and that have the highest demand of insurance. So we are very pleased with that.
OK, you're looking at a share buyback then in total, because you've already announced, am I right in thinking €3.8 billion, now a fresh €1.2 billion, so about €5 billion in terms of buybacks, and you've raised the dividends. Can investors expect any more going forward? Can you do more to return cash to shareholders?
So these two buybacks are from two different sources. We have, first of all, in our capital management policy, a target of a payback around 75%, which is composed of the dividend that is rising 9% and the share buyback of €1.2 billion. That's more like a regular issue every year. Then you have the €3.8 billion that you mentioned, which comes and will come from the sale of AXA IM that will most likely close towards the summer of this year. So these two numbers are what investors should expect for this year.
OK, you had exposure to the LA fires, €100 million in terms of losses, expected losses. Thomas, what is your level of confidence that that is the final number?
Look, when we estimate those numbers, we work a lot with geocoding and satellite imaging. And normally those numbers are extremely precise, maybe even on the high side. This number in general, 100 million, is relatively low for us, is relatively low for everything you have seen with our competitors, which also shows that we have a very prudent and selective way of picking our risk and our exposure and making sure we are as diversified as we can.
On natural disasters, there's an expectation, given the climate crisis, that these will just continue. Are there more parts of the world now, Thomas, as you look through the geographies that you service, that are becoming uninsurable?
So what we see is clearly that the frequency of climate events is massively increasing. And in particular, what we call them the secondary perils. So fires, droughts, floods, smaller local events that we haven't seen beforehand. And therefore, yes, this will continue to rise. Will it lead to uninsurability? No. Because you can also prevent against these crises. If you look at the very large hurricanes, so if you take Hurricane Katrina versus Hurricane Irma, they have more or less the same trajectory, and costs have gone down over time. So if you do apply prevention, if you do make sure that when it happens next time there is less claims, these risks will remain insurable. But it means that governments and the insured companies and individuals need to contribute to that matter.
And presumably premiums will rise.
Well, if risks rise and the occurrence rises, premium will rise. But the question is, how can you dampen and better manage the rise of the cost? And this is clearly through prevention. And we have proof that it works.
What is your expectation around the impact on the business of lower interest rates? Markets pricing in up to 1% of additional cuts from the ECB this year. Thomas, what is the impact likely to be?
Look, our business is very driven by what we call technical results. So we are very focused. We are the largest insurer of companies. We are one of the largest insurers worldwide on protection and health. So we focus very much around these what we call technical risks. The investment income is an important source of our profit. And we have, as we've shown in the past, managed very well periods of higher interest rate and lower interest rates. So since we are a long-term investor, I don't think that will have a very big impact on our results.
OK, still in the market for acquisitions?
Look, the year 2024 has been, as I said earlier, a record year. 8% growth on the top line, and this has more or less been done in an organic way. So our company is well positioned, is global, and is really organically working well, which means we don't need urgently to look at acquisitions. Nevertheless, if opportunities present itself, we will have a look at them, but I'm not spending 24 hours a day looking at acquisitions.
OK, understood. Thomas, really appreciate your time. AXA CEO Thomas Buberl on the back of a beat when it comes to the earnings. The stock is up more than 20% in the last 12 months. Thank you. Coming up, the UK's so-called special relationship with the US in focus as the Prime Minister heads to Washington. We're going to have the details later in the show. Stay with us. This is Bloomberg. Welcome back. We have some breaking news when it comes to the energy space, particularly on oil. The Italian energy company Eni signing a memorandum of understanding for a potential joint venture with Petronas. This is to develop assets in Indonesia and Malaysia. We are looking at potentially 3 billion barrels of oil equivalent in terms of the reserves. This is a JV that is being set up between Eni and Petronas, an exclusive memorandum of understanding. And so we will watch that stock at the open, of course, Eni listed over in Italy, a tie-up in the energy space. Now, some other stories making the news this Thursday. President Trump says he plans to revoke, staying on oil, Chevron's license to operate in Venezuela, threatening to torpedo the nation's slow economic recovery. The US president referred to a concession agreement from 2022, which would match the date that Chevron was granted an oil license in Venezuela, despite sanctions against the government. Under the terms of the license, Chevron would have a 6-month wind-down period to exit operations in the country. And Bloomberg has learned that Nissan is drawing up plans to replace its chief executive following another dismal set of earnings and the collapse of talks to combine with Honda. The carmaker's directors are gauging interest in potential candidates to succeed Makoto Uchida, the company veteran who's been CEO since late 2019. And Bloomberg has learned that founders of Ben & Jerry's have expressed interest in buying back their namesake ice cream brand from Unilever. Ben Cohen and Jerry Greenfield have held initial discussions in recent months and are looking to partner with socially minded investors in any transaction. Unilever says it's on track to separate the ice cream business by way of a demerger. Coming up, President Trump threatens 25% tariffs on EU cars and other goods. We are live in Cape Town. We're going to be speaking to the Spanish economy minister. His reaction to that renewed threat is coming up. Stay with us. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Good, but not good enough. Asian stocks fall after Nvidia fails to meet sky-high expectations. The chipmaker warning of lighter margins as it rolls out the highly anticipated Blackwell chip. confusion on tariffs. President Trump gives conflicting answers on levies planned for Canada, Mexico and the EU. But the UK Chancellor tells us Britain can boost trade with the United States. Plus, more world leaders make their way to the White House, with the UK Prime Minister arriving today. Ukraine's president expected on Friday. Part of the conversation will be around defence, of course. Talking of which, we have some earnings crossing right now from the defence company based in Germany. The stock is up about 47% just in the last year to date, in fact. Hensoldt coming through with a miss in terms of its earnings, with a revenue forecast below the estimates. You are looking at margins as well, coming in a little softer in terms of the forecast for 2025. Margins for Hensoldt. Margins expected around 18%. The estimates had been for 17.9%. So very, very modest miss on the margins outlook. In terms of full year revenue, we're looking at 2.24 billion euros. That's for the most recent year. So full year revenues coming in at 2.24 billion, slightly below the estimates of 2.31 billion. So a little softer on the revenue side for the full year, and the outlook for 2025 on margins just marginally weaker as well. But that company certainly in focus and has seen a very strong run-up. Year to date, up a little over 40%. We continue to watch, of course, the defence companies as Germany and other nations like the UK commit to further defence spending. Let's get to the broader market check right now. Trump's tariff confusion, part of the mix, but also Nvidia. And we've seen some of their suppliers like SK Hynix over in Asia taking a hit on an earnings story that was good, but, quote, not quite good enough. There's an expectation gap, isn't there? And there's question marks about how sustained the demand for Blackwell will be going forward. European futures pointing lower by 0.4%. FTSE 100 futures off by a tenth. S&P futures looking to turn around, pointing to gains of 0.4%. Nasdaq 100 futures, tech heavy, of course, looking to add 101 points, despite, in some quarters, little disappointment around Nvidia. Let's flip the board and have a look cross-asset. You saw big moves again into US Treasuries yesterday, with the yield on the benchmark 10-year falling. Today, yields are up a little over 1 basis point, but still below 4.30 on the 10-year. Euro dollar a little softer by 0.1% at 104. Brent getting a lift up 0.3%, and gold back below 2,900 per troy ounce on the yellow metal, currently down 0.7% in the session. We brought you some lines from Eni tying up with a partnership around Petronas. This is focused on Malaysia and Indonesia. It's the Italian energy company, of course. We have some details in terms of their earnings now, and the redhead across the terminal. Breaking news on this Italian energy giant is that for the fourth quarter, adjusted net came in at below the estimates. It's a miss in the fourth quarter for Eni, 892 million euros. The estimates had been for just shy of 1 billion euros. So it's a miss in the fourth quarter. That's on an adjusted operating profit. Production coming through in the fourth quarter just slightly above the estimates, in fact, 1.72 million barrels. The estimates had been for just below 1.7. In terms of operating profit, that was also a miss for Eni in the fourth quarter, coming in at 1.7 billion euros. The estimates had been for over 2 billion euros. That is a stock, certainly, for you to watch at the open. Now, the club of finance ministers and central bankers who've steered the global economy through a quarter century of market meltdowns, recessions and the pandemic are now pondering, of course, how to deal with Donald Trump's tariffs. Let's go straight to the G20, where Bloomberg's Jennifer Zabasaja is standing by with someone who has important views on this topic. Jen.
Yeah, that's right, Tom. I'm standing by with the Spanish economy minister. That's Carlos Cuerpo. Of course, Minister, great to have you here on the show. Tom was just talking about the confluence of issues that ministers like yourselves are faced with. Before we get into that, I want to talk about defense spending, because that is really the topic of town, especially when it comes to Europe. You are a proponent of a common funding mechanism for Europe. Do you think you'll actually achieve that? How close would you say the Bloc is to getting to that?
Well, I think discussions have evolved quite substantially over the past few weeks. Of course, what we know in Europe is that we have to strengthen our own defense capabilities. We have to reinforce the defense industry in Europe. And for that, we have to actually have a two-leg approach. So first, of course, a domestic approach where we have to increase our defense spending. But there has to be also an EU joint approach. Defense is clearly the public good with very positive externalities for the rest of EU countries. So there needs to be a common a joint EU approach. And I think we're making progress in that direction. And I would expect also somehow that everyone rallies around this two-leg approach, because we need both elements.
What are some of the sticking points? A number of your counterparts are here. Have you been able to speak about that during these talks?
Well, we will actually have a meeting during lunchtime on these particular issues from the EU side, because again, I think it's a pivotal moment for Europe to really rethink how we will face this defense challenge for the next few years, and how we're going to actually face the funding gap that we need to get where we want in terms of defense capabilities, which is a key element. And again, I think there are two efforts to be made there, one on the national, on the domestic front, and one at the EU side, at the EU level as well.
So your expectation then is that we will see that over the next few months, potentially an agreement?
Issues are evolving rather quickly, and I would expect that we can rally around this very important discussion and have a positive conclusion.
And Minister, let's talk about tariffs, because that is also a concern for a number of your counterparts. When you think about Spain and obviously the EU, how concerned are you about this potentially weighing down and getting in the way of any sort of growth for the bloc and for your economy?
Well, on tariffs, I think from the EU side, there are three elements. The first one is we have to be prudent to see how things materialize over the course of the next few months. Of course, we want to be constructive, but we should not be naive in what's coming. I think that could be a quick summary of what we need to do. And again, let's see how the different announcements do actually materialize. So let's be prudent. Let's not anticipate what's going to happen. And in these few weeks that we have, we need to keep on negotiating. We need to keep on trying to get to an agreement that would be actually beneficial for everyone. So there is a win-win situation where we do not engage in increasing these protectionist measures on both sides of the Atlantic. We have the greatest economic relationship between the two blocs, so that's what we should be fostering and maintaining going ahead. But again, of course, Europe will be ready if there is an element of unfair tariffs that are imposed on our firms. We need to protect our customers, our consumers. We need to protect our firms as well, and we'll be ready to do that. We have the instruments, and of course, Europe has to be, again, constructive but not naive.
So at this point, are reciprocal tariffs then off the table, or are they still a consideration?
Well, again, from the EU side, we need to be waiting and negotiating, engaging.
So it depends what the US then does.
Of course. I mean, as we've said since the very beginning, we need to promote further strengthening of this bilateral relationship. I mean, when you look at goods and services trade, it's the greatest economic relationship in the world, this transatlantic relationship. Also from the Spanish side, we want to engage further on a constructive way, where we should be putting all our efforts. And in any case, we'll have the instruments to respond if we see that there is an unfair treatment of our companies or our customers as well.
Have you spoken to your U.S. counterpart at this point?
Well,
He's not here. Yes, of course.
It's unfortunate that he could not make it, but we will have the possibility to talk with him in the next few months, next few weeks. Also, the European Commission is engaging already with U.S. authorities, so I think that's the way forward, and that's what we would expect. And at the same time, from the EU side, we have a lot of homework to do in terms of further integrating ourselves. For example, when you look at the impact of really achieving the internal market at the EU level, in terms of goods trade, is the equivalent of reducing by 45% tariffs for our firms. Or when you look at services, it would be as reducing by more than 100% tariffs for firms. So we need to also keep on doing our own homework at the EU.
Minister, a lot of people are wondering whether the retreat of the U.S. on some of these multilateral frameworks potentially opens up the opportunity for other players to step in. Do you see the EU being the gap that fills the gap that we're seeing right now, or do you see other players like Russia and China maybe stepping in?
Well, the EU has always had a very clear idea and drive towards multilateralism, and of course towards the impact of multilaterals on the developing world. And we will be continuing actually hanging on to these principles and helping out. Of course, if there is need to fill any gap, Europe will be responding.
What does helping out mean, especially in the African context? Is that more investment? Is that debt relief? I mean, what is it that you're considering?
Well, we're looking at all different ways to help out. So, of course, even looking at innovative ways to do it. So the first one is looking at debt. We know that half of developing countries countries are either in debt distress already or in actually danger of being in the next few months. So we need to engage with debt post clauses, debt swaps also for investments. We need to look at further financing, but on a bilateral way, from multilaterals as well, but also from the private sector. And here Spain will be, we will have the International UN Conference for Financing for Development in Sevilla in June. And that's going to be a pivotal point also to further foster these multilateral debt relief and multilateral also financing for the developing world.
So those engagements have started then already?
Yes, of course.
All right, we have to leave it there, unfortunately. That's the Spanish Economy Minister, Carlos Cuerpo, joining us here at the G20 Finance Ministers and Central Bank Governors meeting. Tom?
Yeah, look, another great and very timely interview. Jennifer Tabasaja in Cape Town. Thank you very much indeed. We're going to have more guests, of course, from the G20 today at 8:15 a.m. UK time. We're going to speak with the CEO of 91, one of the biggest investment managers in South Africa. Staying with the G20, the UK Chancellor called on European countries to raise defence spending and defend the continent against Russia. Rachel Reeves also told us Britain can boost trade with the US, even in the face of President Trump's tariff threats.
We've set out that fully funded, fully costed plan in the next 2 years to take defence spending to 2.5% of GDP, to improve our national security and to make our economy and our country stronger.
The Prime Minister is going to be meeting President Trump on Thursday. You have just increased defence spending, which is obviously what he would like. Do we hope to get anything in return? Do we hope, for example, for him to withdraw the threats of 20% tariffs, if possible?
We've increased defence spending to improve the security of Britain, and it's in our national interest to do that. The Prime Minister will be meeting President Trump to discuss a range of issues, but it is important that right across Europe we increase spending on defence to play our full part within NATO and to keep the continent of Europe safe against Russian aggression. In terms of the future trading relationship between the UK and the US. Last time that President Trump was in the White House, trade and investment between our two countries increased, and I have every confidence that that can happen again. And I know that the Prime Minister looks forward to talking about those issues and many others in his meetings with Donald Trump.
OK, UK Chancellor Rachel Reeves speaking to Bloomberg's Phil Aldrich on the ground there at the G20, of course, in Cape Town, South Africa. Prime Minister Keir Starmer, as Phil mentioned, will meet with President Donald Trump in Washington today. For a preview, our UK correspondent Lizzie Burden joins us now. This is a crucial meeting. How do you expect it to play out?
Yeah, the stakes couldn't be higher. You can tell Rachel Reeves knows that. The NATO alliance, the special relationship depend on this meeting going well. It's probably the most important meeting between a US president and a UK prime minister since the Second World War.
Wow.
So that is how Keir Starmer is framing it at home. In terms of how he'll frame it to Donald Trump, I think he'll be talking about why Trump needs Europe to be the winner here. So what he's asking for is a backstop. If he is, Starmer, going to put boots on the ground in Ukraine once there's a peacekeeping force, he is going to need the US to provide the air support and the intelligence to back that up. So really following on from what President Macron asked for when he was in Washington earlier in the week. Now, to lay the groundwork for this, before he's even gone to Washington, Keir Starmer has already set a timeline for how he's going to spend more on defence, 3% over the next decade. It's going to come out of the aid budget, which you might say is quite a Trumpian move, although Starmer's cabinet would deny that comparison. It's also why there hasn't been much of a bond market reaction, because it's a reallocation of resources. But what I'm wondering is whether actually Donald Trump is going to say, that's not enough. We've heard from the US Defence Secretary Pete Hegseth on Twitter, or X, saying that this is a good step. Is Donald Trump going to say we need more steps? Because previously, of course, he said he wants NATO allies to spend 5% of GDP on defence.
And this is one reason why this is going to be such a pivotal meeting, as you say, between the Prime Minister and the President later today. Lizzie Burden, thank you very much indeed for a preview of that meeting. Coming up, we're going to switch focus because a German startup claims to have designed the world's first integrated concept for a commercial nuclear fusion power plant with potentially huge implications. We're going to speak to the company's CEO next. Stay with us. This is Bloomberg. Welcome back. Now, European Commission President Ursula von der Leyen met EU industry leaders yesterday, attempting to boost competitiveness in an ambitious green overhaul. This, as German startup Proxima Fusion claims to have designed the world's first integrated concept for a commercial fusion power plant that would provide clean and potentially limitless energy. The co-founder and CEO of Proxima Fusion, Francesco Sciortino, joins me now. Francesco, thank you for coming bright and early into the studio. Talk to us about this breakthrough that you and the team have achieved and what the potential implications could be then.
Great to be here. Thanks for having me, Tom. So yesterday we announced the publication of this world's first conceptual design for a fusion power plant. This is based on a concept called a QI HTS stellarator. We've been able to do this at record time after spinning out from the Max Planck Institute for Plasma Physics and working with our partners. And what this breakthrough means is that we have a path, that the way to fusion power plants now is relatively clear. Now we are in execution mode. We have to demonstrate the magnet technology that is so central to this concept. And we can build on the experiments that within the Max Planck Society have already been built. Now the way ahead is pure execution.
And to be clear, you describe this, you claim this is a global first. There's a lot of companies in the US and Europe pushing through on nuclear fusion, but you say this is a breakthrough that no one else has yet achieved.
That's right. So what's really special about the Stellaris concept is the integrated, coherent nature. So if you look at the publication that has come online yesterday, it's the integration of the physics and the engineering, many metrics. You know, it's not just about being the best at one single thing. It's about putting all the puzzle pieces together. And that is a world's first.
What is the potential of nuclear fusion long term?
So a concept like Stellaris that operates continuously and in an inherently stable way has the potential to fundamentally substitute some of the natural resources that we've been building up our society on. So we're moving towards a society where power is associated with natural resources to one where really technology leads the way. So the purpose, the ambition of Proxima Fusion is to really change society, to enable human ambition to really not be limited by clean energy.
What then is the time frame for getting this operational?
Yeah, so Stellaris is the concept for a power plant. Our objective is to get that first-of-a-kind power plant operating within the 2030s. To get there, we have to build a net energy steady-state device. The target is to operate that by within 2031. And to get that done, we need to finish a full-scale high-temperature superconducting magnet, a very complicated beast, within 2027. So these are the key milestones, 2027, 2031, and then within the 2030s, we can get fusion on the grid.
Has the increased demand for energy from AI led to increased excitement about what this potential, the needs for this, is it just underscored the needs for this technology that still needs, of course, be proven in a kind of concrete way?
Absolutely. So there are so many things that are happening at the same time. There is clearly a series of technology breakthroughs, from high-temperature superconducting magnets to computation. So we talk a lot about simulation-driven engineering and how that allows us to integrate all the elements of the design.
So AI has actually assisted you in getting through this breakthrough?
That's right. The full ability to use computation at scale and to create training sets and to bring all the pieces together, not to have engineers in one room and then in the other one, but bringing them in one integrated system. AI is part of that as an opportunity to transform the way the kind of geometries for this complicated set of magnets that we're working with. Yes.
You mentioned you're a spin-out of a very well-established research institute in Germany. How well-positioned is Europe when it comes to nuclear fusion?
In magnetic confinement fusion, so the category of fusion research where we are operating, Europe is at the forefront. So I myself have been doing research, my PhD in the US at MIT, and coming back to Europe to join the Max Planck Society, I was really able to appreciate the sheer scale of public investment that we have done in the field. The Max Planck Society is clearly one of the leading institutions on the planet, both working on so-called tokamaks and on stellarators. And the most advanced stellarator on the planet is called W7X, and it's in Germany, and that's why Proxima is based there.
So to be clear, this is one cutting-edge technology where Europe is actually leading over the US and China.
Yes, when we started in 2023, there was a clear void of the whole of Europe being at the forefront in R&D in magnetic confinement fusion, and yet there was a lack of entrepreneurial spirit of saying, we can bring all the pieces together, we can take these different technologies, these tailwinds, and bring them together with the right people. A lot of it came down to bring in talent from many Europeans, from the US, from New Zealand, from all across Europe, into one team that operates together with this key partner.
Francesco, you're 5-6 years away from getting spades in the ground for this power plant, potentially for this nuclear fusion plant. How much funding do you need between now and then? Are you raising again this year?
A fusion company is an ambitious kind of company.
Yeah.
We are, of course, always looking for partners to actually finance the full journey. Right now, we're focused on the high-temperature superconducting full-scale demonstration magnet, which we aim to deliver within 2027. The whole project that we call Alpha, the Net Energy Steady-State Accelerator, targeted for 2031, that project is a 1 billion scale project. If we get that project going, the path to fusion power plants is so clear at that point. So all eyes on building a European moonshot in a technology where Europe leads the way. We have to get our act together and build this as a continent on one mission.
Okay, Francesco, thank you very much indeed on this breakthrough around nuclear fusion and what it could mean in the years ahead in terms of our energy mix. Francesco Sciortino, co-founder and CEO of Proxima Fusion. There's plenty more coming up. Stay with us. This is Bloomberg. Welcome back. So markets, of course, still adjusting to the Nvidia results that came through. Good, but not great. They beat modestly on the current earnings, in the fourth quarter. The current outlook, a little bit higher than the mid-range, but at the top end of the range in terms of estimates, you're not getting there at all. And so that's the missed expectations gap that comes through. On the revenue front, there's the beat then, 39 billion in terms of the quarterly numbers that came through, above the estimates again. Operating income also marginally above the estimates. The margin story is interesting because pushing out, they do expect slightly softer gross margins. 64.9% was the operating margin, but gross margins pushing out as a result of the rollout of Blackwell. They did guide a little weaker than expected, so that could prove something of a drag. Net in coming in slightly above the estimates as well. Let's flip the board and have a look at the Blackwell story, because this is where Jensen Huang said he is seeing very, very strong demand. In fact, in terms of product ramp up, they haven't seen anything like this before. They've delivered $11 billion of the Blackwell revenue to meet that strong demand. So that is the chip to watch. Going forward, they're building out Rubin, which will be the next iteration. But for now, it's how much demand there is for Blackwell. And again, $11 billion. The context as well is that in terms of revenues, those have doubled in the last 2 years. And you put just the data center unit of Nvidia together, and that is generating more revenues than their competitors, Intel and AMD combined. After hours, let's have a look at the pricing around Nvidia. We've seen some of their suppliers in the Asian session a little softer on those results. And in terms of the after-hours print, that's 1.5%. We continue to watch the impacts, of course, on Nvidia earnings through these markets. The opening trade is up next. This is Bloomberg.